Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning. This is the IRS Solution Attorney, Darrin T. Mish, and I'm joined today by Katrina, my co-host.
Good morning, and welcome to the show.
How are you?
I'm doing fantastic.
We're going to do something a little bit different today.
Yeah, that. And Pat George is going to be hosting the show today.
So we're going to do something a little bit different today, and we're going to talk about the lyrics in the chorus to the Beatles song, The Taxman. We wanted to play it just to kind of remind people and jog their memory about, actually who the Beatles are, because it's been a while.
Pat could probably play some of those lyrics while you're chanting them.
Well, the chorus goes like this. If you drive a car, I'll tax the street. If you try to sit, I'll tax your seat. If you get too cold, I'll tax the heat. If you take a walk, I'll tax your feet. Doesn't that sound kind of like the IRS?
Just to freshen up your memory.
'Cause I'm a tax man. Yeah, I'm a tax man. Don't ask me what I want it for.
I thought I heard something about 5%. That's the ironic part, and it tells you how old the Beatles are, because I don't think they tax anything at 5%.
That might have been what the tax rate was in England at that time. I'm quite a bit positive it's higher than that now. So the theme of the show today is what the Beatles could learn from my tax tips for the self-employed.
Ooh, I like it.
That would have been probably a longer song then.
Yeah, it would have been. Would have been a little bit harder to get that to rhyme too, I think. What rhymes with employed? Enjoyed.
Deployed.
Or deployed. Yeah. Yeah, there you go. So the first lyric here that we're going to talk about is if you drive a car, I'll tax the street. And actually there's proposals, especially in California right now, that they want to put, or some politicians want to put a device on your car so that they can tell how many miles you've driven, and they want to tax you per mile. Which, yeah. Katrina
That's
just
kind of like wipe off if you get any miles deduction, like on your IRS return. That's going to pretty much eliminate it.
Yeah, Katrina, the real estate agent, she just went cross-eyed when I said that because, she's driving the Prius and, I don't know, probably a lot of miles, right?
At least 3,000 a month.
Okay, well, I'm at about 2,000, so, and I don't even have to drive anywhere.
At least.
Yeah, so that would really be bad, I think, but... just yesterday.
Like, how come? I mean, I know California does some funky stuff. Like, literally, they pull stuff sometimes out of where. But how can they actually get away with that? Like, it blows my mind.
It hasn't passed, but I think some politicians are looking at it as a potentially, a way to get more cars off the road, which they need to do out there. I'm originally from California, and talk about congestion. I mean, in the Tampa Bay area where we live, we complain about traffic. It takes me an hour to get to the studio every morning when we do the show, but. If we were in LA, it would take
horrible.
2 hours.
Yeah, we've been in that traffic before, and you sit on I-5 forever. Like, you literally just don't go anywhere.
Yeah, rush hour is 4 hours. And I've actually, having grown up there, going to the airport early in the morning or something, I've been in bumper-to-bumper traffic at 4 in the morning. So. And
how long does it take people to actually get where they're going to go? I mean, really, when you think about the average commute in our area, an hour, 2 hours, then you go to work for, hypothetically speaking, an 8-hour day. You're already up to 10, 12 hours.
I can't even imagine.
So if you're in LA, you're talking about 14, 16-hour days, really?
Potentially. But I think there's probably more people working from home, and there's probably more people, quote, working from their car, on the phone, doing conference calls and stuff like that.
Yeah, here's an idea. How about we incentivize businesses to do the work from home thing?
Yeah, I think that's not a bad idea. But, back to the lyric, if you drive a car, I'll tax the street. Just yesterday, I was looking at an audit for a couple that I've been friends with for many years, actually. And one of the purposes, or one of the reasons, rather, of the audit, I believe, was the amount of mileage that this particular attorney had claimed on her, Schedule C. She had claimed like 42,500 miles on her, on her Schedule C. And Katrina's kind of nodding and making a face like, yeah, it could be, right? And so I'm talking to the attorney. Okay, so tell me, I understand you go to courthouses and you have to go to the jail and you have to go all these places. She's like, yeah, I think that number's pretty good. So we got the calculator out, and when I figured it out, I'm like, that's 175 miles a day. Are you driving from Tampa to Sarasota every day? No. Okay. Well, another problem on her Schedule C was there's 3 places to put miles, right? There's business, personal, and other. Other, I think, would be like, mileage for charitable contributions or maybe medical miles. But all she had was, 42,500 miles under business. And there was no other notations. I think that's...
Why would you even put it for personal? I don't understand that.
That's a red flag.
Well, because they're trying to determine what the ratio is of your business miles to your personal miles.
So they're trying to catch that as a flag.
Yeah, and I think it definitely is a flag. So you just have to be careful, Don't claim 100% of your miles as business miles unless, in fact, you have a vehicle that is purely used for business. For example,
That's
I can think of... okay, maybe.
I do. We have 3 cars. So my little real estate car that you make fun of because you drive your big truck, that's my real estate car.
And like another example would be a
FedEx truck.
Yeah, FedEx truck. But that's some of those FedEx ground guys actually may own the truck. I'm not sure.
There are, yeah.
But like a contractor, you have like a construction truck that's all beat up and ugly and dirty and nasty, and it's got stuff hanging off of it. That very well could be 100% business use vehicle. I would be hesitant to advise you to claim 100% of business miles unless, like in your case, Katrina, you had other vehicles.
Right.
So that you can explain, well, if you got audited, they'd say, okay, so how do you get to the grocery store? With like kind of an evil stare.
I take the truck.
Exactly, because you fit more groceries in the truck, right?
That's right. I'm fitting much in that Prius, I'll tell you that.
So I think there are some things, in the mileage arena that are definitely red flags for audits.
I'm thinking about that, and I'm like, yeah, technically, I use the truck sometimes for real estate, and I don't even claim those miles.
Yeah, I think that's probably
like
good
when
idea.
I have to move stuff for people, right? I told you.
I think another problem in the mileage arena can be, using multiple vehicles, because then it really does become even harder to track and harder to prove. Because one of the things that the IRS is going to want to see in an audit is they're going to want to see, okay, let's see the service records for that vehicle, because service records have odometer readings on it. And that's a classic way that they catch people. So if you're claiming 42,500 miles in this case, and you're claiming it all on one car.
So they're checking it to make sure it makes sense.
And the car only has 29,000 miles on it. You think that might be a problem? So
it makes sense to me. It should be in line anyway with what your oil change is and that kind of stuff.
Exactly. You're going to have, unless you're still out there in the yard doing the oil change in the driveway, which in Florida I think is kind of impractical because it's like hotter than the surface of the sun. You're probably going to have a receipt for at least oil changes and routine maintenance and stuff like that.
So number 2, I know you love to talk about this one. We talk about this one all the time, but watching out for hidden tax costs when you claim a home office on your taxes. The home office.
Okay, getting back to our theme. If you try to sit, I'll tax your seat. So. Definitely watch out for those hidden tax costs when you claim.
I was wondering
office,
where you were going for that. I was looking at it going, tax your seat. Where's that coming from?
Could be your lazy boy, right? Could be your seat in front of the TV in the living room. I definitely have problems with the home office deduction, and I talk about it all the time. I think it causes audits. In this particular audit that I was looking at yesterday, there was, in fact, a home office. So one of the
that
interesting
may have triggered
things,
it.
but they didn't claim it, which I was actually happy that they didn't claim it. But what the home office did in that case was there were no commuting miles, right? So her place of business was her home. And so as soon as she left the home for purposes of business to go to the jail or the courthouse or a client's, place, then those were all business miles legitimately. But I think that home office deductions can cause audits because it's really super commonly abused. And so it's just something to watch out for. It also causes additional, record keeping sort of requirements because you have to be able to prove it. You have to know, you have to calculate,
Isn't the space and like percentage of use?
The percentage of the
overall home.
So if you're using one room and the room just keep the math easy, is 1,000 square feet and the house is 5,000 square feet. then that would be 20% of the house. And so you would only get 20% of the write-offs on electricity and utilities and things like that.
And that's what Pat thinks about the home office deduction. You're listening to the IRS Solution Attorney Show. Hope we're bringing you some great value this morning. If we're boring you, let us know that too. 888-404-1010. 888-404-1010. We'll be back in a minute.
Thankful I don't take it all. 'Cause I'm the tax man. Yeah, I'm the tax man.
Well, good morning. Welcome back. We hope you're enjoying the Beatles tunes this morning for the IRS Solution Attorney Show with Mr. Darrin T. Mish.
That'd be me.
I'm your co-host, Katrina Madewell. Thanks for sticking around.
So we were talking about the home office deduction, specifically the lyric, if you try to sit, I'll tax your seat. I just wanted to say, when you take the home office deduction, just to recap, you have extra forms you have to fill out. You have extra records, burdens, that you have to keep. And so it's something that you should, consider taking, particularly if there's, you have a bigger house and you have more expenses. But it does trigger audits, in my opinion. And so it's something that you just really need to have.
You better make sure you have the rest of your stuff lined up if you're taking the deduction, if it triggers audits. That's just what I'm thinking.
Because usually what happens if you get triggered for an audit for, excess mileage or for, your home office deduction or something like that, they're going to want to take a look at your other things too. And
right. I don't want to get sloppy with the bookkeeping.
Almost without fail, at least the audits that I see, there's some problems in some other areas and places that you really don't want a whole lot of scrutiny if you can help it. And I'm not encouraging anybody not to have, good records or to take ridiculous positions, but you just never know. So the next lyric we wanted to talk about is, if you get too cold, I'll tax the heat.
Oh, I'm waiting to see where you're going with this one.
All right, back to the home office deduction. And keeping with the theme, it's kind of hard to, it's a stretch to plug these things in anywhere else. So, you get to deduct a portion of your monthly heating and electricity bills, like I talked about in the last segment, and it's based upon the square footage of your house. So you can deduct, if it's 20% of your house, you can deduct 20% of the electric bill. And in Florida, we don't really have separate heating bills. But in other parts of the country, they have fuel oil or things like that they use.
It just seems so complicated.
What,
all of that.
What, the heating?
Well, no, just like, okay, I'm going to take a home office deduction, and now because the reality of it is it's probably not exactly 1,000 square feet, which means you have to measure your room, which means you have to look at different power bills every month, which means you have to calculate that exact percentage every month. It just sounds like more of a headache than it's worth. In my mind, it's for, the gluttons for punishment, the people that just really, really like to be busy and really want to, break out the calculator and try to get every dollar that they're entitled to. And I'm all in favor of getting every dollar you're entitled to, but not if the ultra nerdy spreadsheet type. It's all right. We need you guys.
Not if it is going to cause an audit for sure.
So number 4 on your list is if you take a walk, I'll tax your feet. You got that sentence lined up there, Pat?
Well, and this is a little bit of a stretch too, but if you've recently become unemployed, and you become self-employed because you got laid off, you've taken a walk, get it? So
no, right over my head. You'll have to explain it to me like I'm 5. Sorry.
Well, if you lost your job or if you quit your job, you took a walk, away from the job. That's where we're trying to shoehorn this in today.
Okay.
But if you recently became self-employed because of a career change, you want to make sure you take advantage of all the tax advantages that may be available to you. Really, being self-employed or being a small business owner is really the last great tax benefit, because there's lots of things that you can deduct if you're self-employed, and there's lots of things that I like to call dual purpose.
And it's a funky transition. We've talked about this before a lot with some of the clients that you help, and a lot of them are self-employed.
I would say probably the majority of them are self-employed, and what happens is we become
it's weird to make that that transition. There's nobody teaches you that.
Yeah, there's a great book by an author named Michael Gerber called The E-Myth, and he talks about that transition in a lot of ways, where we become, the baker opens a bakery because he's great at baking and he's passionate at baking, and that's why he decides to open his own business. And a lot of lawyers do the same thing. They work for the government. I worked for the public defender's office for a couple of years, and I went out on my own primarily because I was starving at the salary that I was working for, but so I was kind of pushed out as a matter of necessity. But we open our businesses because we're passionate about it. And then what we're not passionate about is like all the administrative stuff.
Right.
that.
And when you're a small business, you're just starting, you're still trying to figure out, what your income is going to be for the company. And then, in his book, as you referenced, you have all the little pieces. So you have, the baker, the technician, and whatever the third one has been a long time since I read the book. But it's doing all of those things, and it leads to burnout.
Yeah, for sure. And one of the things that I see, not one day goes by without me talking to a small business owner, and I say, okay, so how much money are you earning? And they say, I don't know. That's scary.
That's true.
Actually. And so a lot of times one of the clarifying questions that I have for them is, well, is it, $2,000 a month or is it $20,000 a month? And they usually get like a scoff, and they say, well, it's, maybe around 4.
Well, because a lot of self-employed people, as opposed to planning, they're like, oh, I have money, so I'll take it now. And they don't save for those up and down times. Real estate is one we see that a lot.
Yeah, for sure.
In this market we're in now, everybody's new cousin is a real estate agent. They are, right? So some of these people will probably be your clients in a couple of years. I don't know why you're laughing.
Well, they definitely will be my clients in a few years, because there's one thing about the tax problem resolution business, and that is that there are people today in a good economy or in a bad economy. There's people today that are deciding, I'm not going to pay my taxes. And that decision is not going to catch up with them for a few years typically. And so there are people today that are making that decision. And in 2020, they're going to come and hire me. And that's great.
And I don't think it's intentional.
It's
I think
not.
it's, I'm living on the top of this wave right now and things are good. And then the next thing you know, the wave hits the shore and they're like, oh, where'd the money go?
It's for sure not, intentional. And I didn't mean to be, sound cynical or anything like that. I mean, I don't even think they're bad people.
Every business has up and downs. That's the point. My business,
Oh,
your
for sure.
business, anybody that's self-employed, you're going to have those up and downs. So if you can even try to take an average.
So I think what's really important is that a small business owner, especially if they're just starting out, or maybe they're anticipating growth, you have to have some system really for almost everything. And not having a system is in fact a system of sorts. It's just a really bad system. So even
that old saying, if you're doing the same thing more than once, more than twice, you should have a checklist of some sort.
Yeah, for sure.
I have a question. I have a little hot dog cart that I took around about 1.5 years ago. But because of this job now, I haven't even, since I got the license and I got all permits and all the licensing. So I'm on the radar now, but I haven't used it in a year. Now, what will happen? I mean, someone's expecting me to pay taxes on something?
That should be a loss, is what I'm thinking, if you have expenses and no income.
Yeah, you're not going to have any income, right?
Right. No, I haven't used it. It's been parked.
But you still pay the license fees and stuff, right?
I paid all the license fees, which, was totaling something around $500.
But you didn't make any money.
No. Do I have to do a Schedule C to deduct that?
I think you do. I think you need to file a Schedule C. I don't think it's going to be a big deal because your loss is really pretty minor. But at some point, if you start to stack
It'll be the loss from the license that never got used for the whole year.
Yeah. If you start stacking up those losses, I think the rule of thumb is you have to make a profit 2 out of 5 years in order for them to kind of buy that it's not a hobby business.
Right.
And
because in 5 years, really, if you're not making any profit, you're probably going to quit and go get a job.
Right. The company's the endeavor.
That's going to be sooner than that if I don't get that card out.
I think one of your problems is you have to run the cart, so you have to decide that you want to do it, and you have to decide that you enjoy it enough to want to go do it on your off time, right?
You're exactly right.
And up to now,
I think you should just stay in the parking lot, Pat, between the morning and the afternoon shows, and just sell hot dogs to all the employees of Beasley.
How about a day and a half off? You just don't, because you're getting ready to come back on a Monday. You really don't want to be doing it on a Sunday, so it's really a day, and that's a full day of doing that. So you go, that's not going to happen.
Incidentally, are the profits good on a hot dog cart?
The profits are okay. Some people think, and you sell a hot dog for, maybe $2, $3, and some people just have a fit. A hot dog for $3, it's a good hot dog.
If you're hungry and you're walking into Home Depot, you'll buy that $3 hot dog.
It's a gourmet hot dog.
But
this
it was
the best hot dog.
It was really
It's kosher.
It was really a great idea and a great job venture, and then all of a sudden, radio came back into my life. So, the hot dog cart started
I had
getting
this
dust.
chick on my show a while back, and she helps businesses kind of explode. That's what she does. And so she took these people that have food trucks and literally boomed their business.
Interesting. She, Pat needs to talk to her.
Yes.
He needs to have a booming hot dog
No,
business.
because then he'll leave here. I don't want him to talk to her.
I was just thinking, like, I'm super grateful that
Can we
he's
be
our producer.
selfish and
Well, you
say
know
no?
what it is? It's really my 401k. In case I need money in the future, I have a hot dog cart there.
Okay, we're on Money Talk right
It's a
now.
retirement plan.
We're on Money Talk. I'm sure there's people that talk about better 401ks than the hot dog cart.
You know. Realtors' 401k plan is properties.
So, when you're self-employed, there's some other, tax deductions and money-saving benefits. Like, you can buy health insurance.
These are probably things people miss, right?
Yeah,
Making that
and
transition.
And if you're actually low income while you're making the transition, you can get Obamacare, you can get, food stamps, you can get low cost, electric service, you can get, you can get an Obama phone. There's low cost auto insurance. There's all kinds of things that are
you have
available
to say
for
Obama
people.
phone. You just can't say public assistance. It has to be an Obama phone. I love it. Spit it out.
That was not pejorative. I mean, that's what people call them, right? I just want to make sure that people understood what I was talking
For
about.
really real, we will get through this list. We come back after the break. You're listening to the IRS Solution Attorney Show. We're trying to keep this stuff fun for y'all now. You can call us at 888-404-1010. We're glad to have you with us this morning. 888-404-1010. Back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa. Welcome back. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell, and that little bump-in lyric was just for our caller over the break. Thank you. So her question was about the part in the song, 1 for you and 19 for me. What's your take on that one, Darrin?
My take is, it seems like it's 1 for the taxpayer, 19 for the taxman, doesn't it?
That's how it feels to me.
Well, there's another way to look at it, and as if you're self-employed, you can actually flip that around, potentially in some cases, where the tax deductions are so significant that it's more like 1 for me and, or 1 for you and 19 for me, because there's so many dual purpose, deductions that people take, rightfully so, and it's what the last,
Okay, what do you mean by dual purpose deduction? Break that down.
Well, if you're self-employed, you need a computer, right? So I actually happen to be kind of a computer nut. I like to have the latest, greatest, coolest thing. So that computer is, going to be a tax write-off for the business, because I'm going to use it in the business. I have this laptop right in front of me, and do I use it at home sometimes? Sure. But its primary purpose is I take it into, my our conference rooms.
Laptop looks a little beat up there, Darrin. It's time for a new one.
It's actually the case is beat up.
The case. Good for you.
But,
good for you.
And then, the latest, greatest cell phones, the latest, greatest technology. I mean, I know people that have rental houses and whatnot, and they, they've never bought a garden hose for their own home, because the garden hose that they buy at Home Depot is always for a rental. I mean, that's maybe a little bit aggressive, right?
I was going to say, you're kind of asking for an audit
there are
with the
people
show
that do that.
talking this kind of stuff. So to get back to your list, because it is relevant, we could kind of run through it real quick and then chime in on it. But some of the money-saving things self-employed people get, like your health insurance, food assistance, low-cost gas and electric, phone service, auto insurance, unclaimed funds earned.
These are really a list for people that are just starting out as self-employed and are perhaps low income. So this is really more of a list that if you're low income, the benefits that you can get.
What do you mean unclaimed funds?
When every state has a list of unclaimed funds where, like the true owner of the money.
Right, it goes
missing,
like
they
to the
can't
state of
find it.
Florida. And
So
they can't.
yeah, so in some states, those funds can go to low income people. There's
After
also
what period of time, do you know?
no, I'm not really sure, but I know that that's an option in some places. Earned income tax credit, obviously, if you're low income and you have children, you're going to be able to take the EIC. Child tax credit, I mean, hopefully.
That's at any income bracket that you get that one.
Hopefully, I mean, kids are so expensive. You need that break. You deserve that break. You should take it.
And what's savers credit? I've never heard of that one. Like the government they don't benefit you for earned income. Was that a snafu on our list?
Yeah, I think so. I'm not really sure what was up with that.
Because you definitely don't get compensated for, retained earnings, if you will. So if you want to catch up with Darrin, just so you know how to reach him, because I know a lot of the times the people that listen to the IRS Solution Attorney show, you don't want to call the show. We get that. So you can reach Darrin at 888-GET-MISH, 888-GET-MISH, M-I-S-H, or you can catch up with him on Twitter at Darrin_Mish. So let's go into, we had a couple questions, or you did, from some of your folks. I'll read it and you can chime in and answer it. And this is a pretty good one, I think. She says, my husband owes a lot of money to his ex-wife in child support, and the IRS sent a notice that they're going to seize our taxes. It doesn't seem fair that they're taking part of my refund, too. Is there anything we can do to protect my part of it? That's from Lisa in Tampa. Thank you, Lisa. Great question.
It seems like over the years, the IRS has become the preferred collection agency for a variety of different kinds of debt. And child support is one of those. Student loans actually are another one of those. There's a couple other things as well that the IRS can actually take your refunds and offset those and send them to those agencies. What Lisa actually needs to do is she needs to file a Form 8379. That's a Form 8379, and it's for an injured spouse. Now, let's not confuse this with an innocent spouse. An innocent spouse is something entirely different. An innocent spouse is where you have one spouse that's trying to claim, hey, I'm not responsible for that joint tax liability.
Like my husband had a gambling problem kind of thing or something like that?
Yeah, and we really don't have time to get into it too far because we're not talking about innocent spouse so much. What Lisa is she's potentially an injured spouse, meaning Lisa's part of that tax refund can be recaptured and she can actually get it if she files that Form 8379. So now if Lisa didn't work and it was only husband who worked, then it's not going to help. But if Lisa had a job and had some withholding and would have had a refund coming, but for the this problem that they have where he's not paying his child support, then she's going to go ahead and get that if she files that Form 8379.
So is that like half of the tax refund, or is it just essentially her part? Or
it's her part.
I'm splitting hairs.
Yeah, it's not necessarily half. It could be the majority. Maybe husband doesn't work, and she does all the work. Then she's going to get it all. So it's something that comes up quite a bit. This is a common question, especially at this time of the year, because people are just realizing that they're not going to get their refunds. And, it's just something that's really timely for right now.
We had one more question from Joe, and I think Pat has one too. Joe wants to know, can I receive a tax refund if I'm currently making payments under an installment agreement or payment plan for my 2014 federal taxes?
Well, Joe, I've got some sad news for you.
It's always sad news.
I would say
no, it's not always sad news.
Likely not.
Every time we do a show, we have a happy segment at the end. The IRS Train Wreck of the Week, which is coming up in the next segment. But Joe, I have sad news, and that is that if you're on a payment plan, also formally known as an installment agreement, you are not going to get your tax refund.
Swoopy.
Because they're going to go ahead and take it, then they're going to use it to offset what you owe them. However, if your tax refund is enough to completely pay what you owe them, then you will get the remainder as a tax refund.
I'll tell you another way the tax man gets their money. I was buying a lottery ticket, and this little lady came up to me and said, "Why are you wasting your money on that?" I said, "Well, I want to, win. I don't want it all. I just want a little bit." And she goes, "Well, I won a little bit. I won $32,000, and I went down to collect my money. And the first thing they did was ask for my driver's license. I slid it under the window. They took it, made a copy of it, gave me back my license, and said, all right, come back and get your money tomorrow." And she said, well, why can't I get my money today? And when she came, they said, well, we have to do a little research. And when they did the research, she came back and she got, I think she told me $4,800.
She owed tax money?
She had been getting free daycare from the government and been getting unemployment. And because of all of that, It wasn't free anymore now that she won the lottery. And they took all their money back.
Good story, Pat.
What the government giveth, the government can taketh away. That's the problem, right? Is there is no such thing as a free lunch. The other thing that's interesting about gambling and gamblers in general is that you have a silent partner. It's your uncle. Your Uncle Sam.
I asked her. Oh no! I asked her about why didn't she let her uncle come down and get it if she knew she owed money. She didn't trust any of her family.
Well, in my story, your silent partner is uncle, and Uncle Sam is only your partner in your winnings. He doesn't want to be your partner in your losses, but for sure you're going to have to
like
pay.
A hot potato.
You're going to have to pay taxes on those gambling winnings as well, and so
can you keep your tickets and really claim those if you're a chronic lottery player? Can you really do that?
You can, actually. You can offset your winnings as to the losses in that particular tax year. I've seen people, at the horse track, right after the end of
I know where you're going.
At the end of a race, everybody just goes, "Oh shoot, I didn't win," and they throw their tickets on the ground. I don't recommend going and picking up those.
No, not at all. But I thought about people. People probably do that.
Yeah, they're going to have footprints all over them and stuff like that, and that has a tendency to be a telltale sign that you picked it up off the ground at the track. I don't know. I've never had a case where somebody tried to use losses at the horse track as losses to offset some other kind of winnings.
I do actually buy lottery scratch-off tickets.
Okay.
And we give them away. Just a little thank you if someone introduces me or refers me.
Well, how about that? I didn't want to tell you, but I won $17,000 from your ticket.
Whoa, did you really?
No.
Oh man.
It was very nice. I won $4. So
Yay!
Well, there you go.
So Pat sent me a referral. He introduced me to somebody that lives in my neighborhood, and I sent him a little just handwritten thank you note, right? Because nobody does that anymore.
And she sent the good tickets, though. I said, wow, look at this. She sent nice tickets. You spent a lot of money there. And
it's a write-off. I mean, I'd legitimately give them.
I think that's a business gift.
When you purchase this much at this price, you got to win. And I got $4.
Well, you did in fact win.
I did win.
You just didn't win what you wanted to win.
So my wife took the $4 and bought 4 more tickets, and I don't know about what the outcome was.
Maybe we'll have a new story for you tomorrow on the 4 new tickets. You never know.
Yeah, it sounds like that didn't work out so well, Pat.
So if I do have the $1 ticket, do I get that whole dollar?
That's the loss?
If I took it, added it in my taxes, do I get that whole dollar? Yeah.
Sure.
Oh, wow. Okay.
Yeah, you get your actual losses as it pertains to the winnings. I had a father and son that were, the son was grown, and they were both professional gamblers. And when I first met them about 10 years ago, they came in and said, "Hey, we're professional gamblers." And I got a big smile on my face, and I said, "So, hey, how's that working out?" Because I expected them to say, "Well, we lose our shirts, every year." And both of these guys playing slots just locally, at Seminole, were always winners. And so we had a problem in that we were trying to offset all these winnings because they gambled so darn much. And so what the law says is you have to have a contemporaneous log of your losses. You don't necessarily have to have receipts too, because especially for slots, you're not going to have receipts. You might have the statement nowadays, modernly, your Players Club card will have a receipt. Incidentally, the casinos don't really want you to see your losses.
I was going to say, I've never seen that.
And so they're not very detailed, and it's because they don't want you to really realize how much money you're losing. But so what I had the client do is I said, okay, well, what I want you to do is I want you to go into the casino, and I want you to take a little notebook. I want you to write it down so you can have your contemporaneous log in case you get audited again. Because actually, the son actually did get audited eventually. And
so did they really put on their tax return professional gambler? Like that was their profession at the bottom where you sign your name?
Well, he had another profession as well. But, I mean, he earned a lot. He earned the majority of his money from gambling. So I sent him into the casino with a log to write down how much he played during a session. We just decided to identify a trip to the casino as a session. And he actually was asked by casino security, politely or not, to stop doing that. So he was in a catch-22. What's he supposed to do? We got to keep track of these losses because we know there's losses to offset these, rather significant gains. And I'm still not sure if they came out net ahead in their gambling activity. I just know they did a lot, and they had a lot of money running through there in a given year. I did win the audit issue because I was able to demonstrate that he was going there quite a lot, and there was no way that he had no losses to generate that kind of winnings. So he probably paid more tax than he should have, but due to lack of records, that's what happened.
Because most people think, okay, I'm going to spend $100 or $1,000, and I'm either going to come out ahead or behind. But really, you lose some, you You gain some, you lose
Right.
some.
And
you gain
these
some.
guys weren't on that level. It was like $1,000 a day
Yeah, I'm sure.
or more, and so then sometimes they'd be down $3,000 and sometimes they'd be up $5,000. And so in lots of ways, a gambling case is very similar to a day trading stock case. It's kind of the same thing.
Well, you're listening to the IRS Solution Attorney Show. We'll be back in just a few minutes. If you have questions, you can call us at 888-404-1010, 888-404-1010. Thanks for listening to the Money Talk family. We'll be back in a minute.
So there's a great line just there. I'm Darrin T, Mish, the IRS Solution Attorney.
If you were zoning into the music like me and didn't hear it, what was the line?
Something about taxing the cat. And
Oh,
if you think about it, they do in fact tax cats, right? You have to have a license in most
Oh, my
jurisdictions for a
gosh.
cat. We think of cats as like this, sort of low maintenance, almost trouble free pet, but you're supposed to have a collar and a license for the thing, and you're supposed to be able to prove that it's had all its shots and all those types of things. So in fact, your cats are even taxed. Dogs too. Just doesn't rhyme.
I didn't even think about that until you brought it up, and it's just going to irritate me. So thank you for that. Thank you very much for that.
If you look at the real tax burden in the United States between income tax, state income tax in most jurisdictions, county fees, local
Tags for your car.
taxes, in the city of Tampa, and my office is no longer in the city of Tampa, but there's like a $200 per lawyer tax per year. So if you're
Is
in
that occupancy or just an attorney tax?
it's literally just an attorney tax. There is no reason for attorneys to pay $200, which is way more than most other
Isn't that
professions.
discrimination
Well,
of some sort? Like, seriously, attorneys put up with that?
we're not the most sympathetic group, but guess who? Ultimately, who ends up paying that? It's not really the business owner. It's really the customers end up paying
any
those
expense
taxes. It
has
all
to
gets
be
passed
passed
along.
on.
So I don't expect anybody to feel sorry for me, but the tax burden in the United States is actually quite high when you think about property taxes, sales taxes, use fees, income taxes. It's really pretty high. There are people that would disagree with me that it's high. I wanted to talk about this news story right now that's pretty interesting to me, at least, and that's that 18 to 34-year-olds are actually more afraid of filing their taxes than any other generation. Isn't that wild?
Well, those are your millennials.
It's because they don't know how. They were never taught. They don't understand any of that.
Oh, please. These are
that's
kids.
not far from the truth, really.
These kids were raised with an iPhone in their hands, and they can type with their thumbs
I don't know,
faster
Darrin.
than.
Like my daughter, she went to the career thing day where everybody had a job and that kind of stuff, and she comes home, she was like almost in tears. She's like, Mom, I had a job and I made this and I had 3 kids and I had to support them, and I go, oh, welcome to life.
Exactly.
She's like,
they don't know the Boston Tea Party.
It's so stressful, Mom. How do you do it?
So maybe you ought to clean your room and stop talking about what a
No,
bad
her
parent I
room
am.
is actually clean. It's not that one. Wrong kid.
Well, I think, what this particular news story that we're talking about on our source says that it's really all the stories about the aggressive and threatening phone calls that people are getting by criminals, that calling up and impersonating the IRS. I actually think it's fascinating that 18 to 34-year-olds as a group, the millennials, are more likely, in my opinion, to vote for, big government programs. They want handouts. They fear the rich and all these things, yet they're the ones that are most afraid of filing their taxes. Wake up. Who do you think is going to be collecting all these extra taxes that you're voting for?
The problem is they don't understand that.
Yeah, exactly. Wake up. It's, big government is not going to be your friend. It might be when you're 18 or, 22, but probably not when you're 52.
Well, when you think about politics, really, there's no way to educate yourself other than reading and listening to shows and podcasts. Like, you don't learn that stuff in school. They don't teach you the difference between a Democrat, a Republican, and an independent.
Well, it's about that time for the IRS trainer of
Just
the week.
saying. Rant's over. Go ahead.
Hey, I liked your rant. I think it's true. The other way to kind of, learn more about politics is just you need more life experience. You got to go get out there and see what's actually happening. School, particularly colleges, are like little laboratories for liberal thought, and that's the only thought that's actually tolerated. But back to my train wreck of the week. I had a really nice gentleman. He was a younger man, actually. He was probably a millennial. He was an immigrant from another country, and he got a job here And he ended up being self-employed, and he ended up owing quite a significant amount of money to the IRS. I guess he was afraid to file his taxes, like a lot of these millennials are. And we got his tax returns filed. He ended up owing $44,026. He's now working, supporting himself full-time, parking cars. And we filed an offer and compromise. And remember, an offer and compromise is that program that the IRS has where you offer to make a deal to settle your tax debt for less.
With the devil.
What was the first thing he said when you told him he owed $44,000?
There was a little stain in the chair.
Yeah, it was a foreign expletive. I'm not even sure I can say that, on the air, but it wasn't a good thing.
Aaron had to throw away the chair he was sitting in.
I don't think he was real happy about it. He was upset. And, he's parking cars for minimum wage, and I'm not even sure what minimum wage is now. It's just low. I know that. And so we filed an offer and compromise where we were offering the IRS to make a deal to settle for less. And remember, I'm going to go over the math real quick. An offer and compromise is calculated taking this formula. Monthly disposable income times 12 plus assets equals the amount of your offer. So let's say our taxpayer in this case had $100 in disposable income.
And some people's eyes are glazing over, just whatever you have left.
Totally understand. So let's say they had $100 in disposable income. 100 times 12 is $1,200. Let's assume they had no assets at all. So you could make an offer to sell whatever size tax liability, really, for $1,200. Well, in this case, I was able to demonstrate that he actually had negative monthly disposable income with zero assets.
Oh, please tell me you got a refund. Please tell me you got a refund.
Well, he didn't get a refund, but it was pretty
dang.
close. We offered $250 to settle this $44,000 tax debt, and the IRS took it with virtually no questions asked.
And then what did he say to you?
It was the opposite of a foreign expletive. It was something like Olay or Bravo. I'm not really sure, but I just talked to him the other day.
Is
He's
he
pretty
your
happy
best
about it.
friend?
Yeah. So he has to pay that $250. He actually didn't have to make any kind of deposit at all because he was so low income. And he has to pay that $250 within the next 5 months. He's sending in the check this week.
I was going to say, it'd be like the same day. Where can I wire the money, please?
One of his obligations is that he has to file and pay his taxes for the next 5 years.
On time?
On time.
And if he doesn't, then they renege that agreement?
If it doesn't, then all that tax money comes back with penalties and
snap.
interest.
Where
That's
can we
pretty
find you?
smart.
Where can we find you? Because people like him need you.
Yeah, so you can find me at getirshelp.com. You can listen to my podcast from iTunes, or you can reach the office at 888-GET-MISH, 888-GET-MISH, 888-438-6474. I love helping people in these situations. It makes me feel really good. I sleep very well at night.
Call Darrin. He loves to talk to you. 888-GET-MISH.
888-GET-MISH is the phone number.
If you have a tax problem, get Mish. 888-GET-MISH.
So I was really happy for him. He feels like he has a fresh start in life. He feels like he's not going to be buried under that tax debt for the rest of his life.
And how old was he? He was a millennial, right?
Yeah,
20-something?
He was 20-something. And so I felt like that was the right thing for the IRS to do in that case. And, surprisingly, or maybe not so surprisingly, actually, they went ahead and went for it because we were able to prove there was absolutely no way he was ever going to pay.
I learned so much on this show.
Definitely fair enough. I love it. Me too. Yes. I know. Well, if I had a tax problem, Darrin would be my guy. I'm just saying.
So tune in next Thursday at 9 a.m. on 1010 Money Talk or the podcast at iTunes.
And don't forget to catch Tampa Home Talk Fridays at 9. I'm your co-host, Katrina Badewell, with Mr. Darrin T. Mish. Thanks for joining us.
And we're out.